Welcome back. You're watching Business Morning on Channels Television. We turn our attention now to the insurance industry. Now, the National Insurance Commission, NAICOM, recently came up with some rules with regards to investment. Now, under the new rules, the Commission says, among other things, insurance funds should not be invested offshore. No insurer shall invest its fund in parent companies or invest in derivatives without obtaining approval from the Commission. I'll be talking about this new rules and its effect on industry practitioners, along with other developing issues in the insurance industry, with Olorundare Thomas. He's the Director General, Nigerian Insurance Association. Good morning to you, Mr.
Good
Thomas.
morning, Harry.
And thank you so much for coming in.
Yeah, thanks.
Just give us your perspective on what's been going on in the industry in the first half of the year.
Well, it's been quite a difficult part of the year. If we are going to look at it from operational perspective, it's been quite difficult. There are few regulatory initiatives that's incepted last year. The industry is doing its very best to cope with those initiatives. You know that within the first half of the year, some of the issues relating to compliance, issues relating to the oil sector and its impact on the economy is also negatively impacting on the insurance sector. Of course, the issue of no premium, no cover that incepted in terms of its implementation. The income generated in the first half of the year, of course, has been impacted on because income of our insured persons, of course, dwindled because the income that they will need to pay their premium also hasn't flowed the way it should. But the positive side of it is that we want to believe that with the new order of this new regime, a lot of rearrangement will have to come into the economic sector, and this definitely will impact positively on the insurance sector.
So let's talk a little bit about this new order that you mentioned, and some of these new policies and new guidelines or rules, if you like to call them. Okay. Let's start with this no offshore investment for insurance companies.
I think the issue of no is not new. These are things that probably evolved from the 2003 Insurance Act. If I would recollect vividly, from Section 19 of the Insurance Act and Section 24 of the Insurance Act 2003, and clearly defines where you should invest and where you should not invest. So it's not totally new. I think what the Commission, our regulator, has done is just to expound the provisions of that Act. And what they are saying is that if the liability is domiciled here, we want to do everything possible to make sure that when the need arises, we can assess the assets that are backing up those liabilities. That's the whole essence. So it's not something that is totally new. It's been talked about, but I want to believe, and the Commission has not even said, don't go. They say, seek our approval before you go. In which case, if we believe that you are comfortable on ground sufficiently, and you have excess fund over and above the liabilities, and you need to go, probably the investment environment is not large enough to accommodate your funds, then we know what to do. But put us into confidence.
So does that also mean that at some point, some of your members had actually gone ahead and done such investments without notifying the Commission? Because that would be the only reason that probably why the Commission has highlighted this again.
No, I think I will have to give you the concept of guideline issuance and regulation making. You say some things for emphasis. There are regulations that are put in place just to make sure that people are reminded. There are others. That doesn't mean that there are people or there are companies that have gone offshore without the approval. Of course, it's not likely to happen. But just to be sure that it doesn't happen, I believe that's why such guidelines and regulations are issued.
But looking at the insurance industry and looking at some of the practitioners, do you think that there are any, or can any of them handle or have the capacity to actually handle offshore investments?
Presently, we have some. Now we have subsidiaries. There are companies that have subsidiaries all over the place. There's nearby Ghana, in Kenya, in Uganda. We have companies that have had subsidiaries. So it's not, it's totally not new. I think what is important to the Commission is the fact that we want to be sure that companies that are subsidiary by reason of interrelationship, they don't do anything that is going to negatively impact on the domestic, the home country's company. In which case, you have a company in Ghana. We make sure that the activities, the investment of that company in Ghana does not impact negatively on the parent company that is domiciled in Nigeria. I think this is one of the essence.
And now we also know that, the regulator is trying to ensure the highest form of corporate governance in the industry. But can subsidiaries really be independent of their parent bodies? Because that's one of what the new rule says.
Well, you see, I think it depends on the extent to which the regulator wants to enforce governance within the sector. But you know that one of the major mission or objective of the regulator is the protection of the policyholders. If you have a subsidiary and the governance structure is such that it doesn't make the relationship quite transparent, you might have to do something about it as a regulatory body, in which case you ask the insurance company to insulate totally that subsidiary from, and you know that if you look at that investment policy, they say the investment, before this can be recognized for solvency purpose, the subsidiary you are investing into must be related to insurance. So you cannot go and just go and do something that is totally distant from the activities of the parent company. It is not going to be admissible. You can go ahead and do it, but for purpose of solvency determination, it will not count.
So in other words, should insurance companies now be looking at divesting?
Well, I think there are some investments that are value added, that we are adding value to the parent company. Those ones can be retained. But where you have those ones that are not quite adding too much value, why not? Why wouldn't you divest? Why not?
One of another rules that came up, among these new ones that we're talking about, was the fact of that insurance cannot have derivatives. They can't take the derivatives option, except they get the Commission's approval or they get the SEC's approval. So, since we know that derivatives are linked to the stock market, are there concerns about volatility in the market, for instance? Yeah,
you see, derivatives, it doesn't have a life of its own, more or less, if you like. Its performance is a function of the performance of the underlying assets. So it's quite, and of course, where you have those derivatives, we don't have it in this market. I'm not aware, but where you have it, it's usually used for hedging, and at times you use it for speculation. So these are things that the regulator don't think right now is good enough for this market. And if you want to engage in that, please talk to us. Yeah, we want to see through what you are putting in place.
But Mr. Thomas, we do have some of these ETFs listed on the Nigerian Stock Exchange. Yes, and then we have the
securities and the rest
of
the
African markets coming and talking together about the fact that they want to do this cross-border listing of ETFs. Yes. And so has there been at any time where maybe your members have been investing in derivatives or risky assets and has raised more than a few calls for concern?
No, it hasn't happened. If we get back to where I started, you want to put in place regulations that make sure that the operators don't go to where they shouldn't go. You want to remind them. You want to let them know that these are the issues that we not, for now, we don't think we can handle. And we don't want you to go into these areas. If you have to go, we want to see through what you have put in place to safeguard the interests of the policyholders.
So now, do you think that with all of these new rules, there's going to be an improved investors' confidence and even investments into the industry?
Well, definitely. I think one of the major guidelines to dealing with these issues is making sure that if you, as a regulator, you want to be on top of your sector, The regulator want to make sure that they issue guidelines that we enhance the development of the market. With these investment guidelines, I want to believe, it's not cast in iron, I must tell you. That's why it is a guideline. So as the implementation continues, if there are those sections or articles of those of the guideline that are probably not workable right now, I'm sure the Commission is amenable to tinkling with those sections. But for now, I think what we have on ground is likely to improve the investment and even returns, and of course instill confidence in the minds of policyholders.
Well, do you get this impression from your members, for instance, that some of these rules are stifling and prevent them from actually reaching their full potentials?
Well, that's it's neither here nor there. Now you want to look at the yield and you want to look at the security. Why the operators are concerned about the yield, the regulator is concerned about the security. So there must be a middle course. So it's going to be a kind of a trade-off to the point that the interest of the policyholder remains protected. I cannot overemphasize this.
No, you can't. Especially since if me, who is a customer, I'm looking for premium cover, and I come to a particular insurance firm, maybe the one that you run, and I'm asking that you give XYZ service to me, and then because the regulator has come down hard and has given you, certain rules and regulations and guidelines, you now give me this impression that I'm stifled. And so the regulator is stifling you and you are stifling me. And at the end of the day, I refuse to come in and get any insurance cover whatsoever.
Yeah, well, it's not going to get as bad as that. It's not going to get as bad as that. But one important thing is the fact that I want to believe that the regulator and the operators are actually coming together from time to time to review policies and guidelines. This one that has just been issued, the industry has been reassured that where there's a need for them to tinker with it, the regulator is prepared to do that. So it's not what the regulatory body we have is a friendly one, and I want to believe that where there are genuine concerns about some of these provisions, definitely they will visit it. And of course, they are not going to compromise their responsibility, because they have a responsibility to both the government, they have responsibility to the insuring public, they have responsibility to all the stakeholders, including the investors. So that will not be compromised. But at the same time, policies that will not enhance the fast growth of the sector, they are not likely to want to come up with such. So there must be a balance between the interests of the operators and that of the regulator.
Mr. Thomas, hold on to your thoughts. Let's take this quick break. And when we come back, we actually look at the NAICOM that industry practitioners such as yourself are expecting from the new chief executive.
Okay.
Business Morning continues in just a moment. And when I